I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market today. Soybeans really pulled back. The trade wars is heating up again, and we kind of took back almost everything that we gained yesterday. The market had a 34-cent range yesterday and also about an 18-cent range today. So we've had some pretty wild volatility, and that actually looked good for getting the market to start to rally. But after a lot has been heating up with the White House and the talks and the idea that maybe the talks were going to start to help, there still is no end in sight right now. And more tariffs will definitely counter any problems that we might have with weather, and adding to the decline in the demand that we have here in the United States really is not going to help the challenges that we're facing already. Now, corn was also lower, and it seems that the spillover selling was really sinking those futures as well. And I think that some of that selling kind of hurt the big rally that we actually had in wheat. But as far as corn goes, that hopes for that U.S.-China talk to resume and maybe lead to a solution were really dashed, followed by some trader liquidation. There just is some concern that the solution is a lot further off than we thought. And that has made the markets kind of turn around, and now, who really knows what's going to happen? It's actually going to be day to day now as we watch each little bit of news start to push the market around a little bit now that we've finally gotten up off our lows. That doesn't mean that we couldn't turn right around and make another new low. I know that some of the markets have turned, and it seems that the trends might be a little bit more to the upside. We're right into that area, and if we start to continue to have hot, dry weather, that should actually drive it as well. And of course, we're watching in the west and the southwest, and now it's even moving north in the west. The hot and dry weather, and of course, they're having a lot of forest fires. That just tells you that that it's really dry there, and so the expectation of some serious crops coming out of those areas are starting to be slim and none. Now, the wheat did make a new high, but those new highs really triggered a lot of profit taking and some selling. Now, the market ended up about 5 cents, but certainly well off its futures. So it looks like that while traders really are looking for higher prices in the wheat, and that's because there has been dry weather and all around the world, Australia, Russia, the European Union, which would definitely trigger a nice little rally in wheat. And if we were at different times, we may see the wheat even $1 higher. But that's not happening right now because of the tariff talks, and we have to kind of take a look at it. So some of those the trade wars and the woes from that are really stopping the surge of this market, or what it could be right now. We just expect that there's going to be a lot more volatility to come. The U.S. dollar index is still pretty high as well. That may put a little bit of a lid on any kind of significant rally going forward. So we're going to watch it day by day. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.